Chapter 2: Financial Assets or Financial Instruments. Types. The types of debt that exist and their characteristics. Explain what bond ratings are and why they are important. Describe equity and some of the features and characteristics of equity. Describe what the derivatives are and some of the more familiar types of derivatives. Asset and a financial asset. Real asset is a physically observable or touchable item. Financial asset is an asset that represents a promise to distribute cash flows sometime in the future. The major financial instruments include treasury bills, repurchase agreement, federal funds, bankers' acceptance, commercial paper, negotiated CD, euro dollars, money market fund, treasury notes or treasury bonds, municipal bonds, term loans, mortgages, corporate bond, preferred stock, and common stock. On different classes of financial instrument. In this picture, you can see on the x-axis is the risk to investors. On the x-axis is the risk to investors. The y-axis is after-tax return. So we can see there are different types of financial instruments. The higher the risk, the higher return. The lower the risk, the lower the return. Along the green line, we can see short-term US Treasury bills is a risk-free rate, which is the lowest risk, and then goes to floating rate notes, first mortgage bond, second mortgage bond, subordinate debentures, income bond, preferred stock, and common stock. Why are there so many different types of financial instruments? Different investors have different risk and return trade-off preference. Firms can raise funds more easily if they can offer the types of securities that investors want. What is debt? What type of debt exists? Debt represents a loan. Two primary classifications of debt are short-term and long-term. Ratings and why are they important? Bond ratings are based on both quantitative and qualitative factors, give an indication of the different risk associated with a bond. What is equity? The value of the assets owned minus the amount of debt that is owned. Equity represents ownership. What are derivatives? Financial assets that have values based on derived from the values of other assets, such as a stock and a bond. What are some of the more familiar types of derivatives? Derivatives include options, futures, convertibles, and swaps.